What's going on, guys? I want to go over the trade that I took today. I was one and done. I will be going over the higher time frame to the lower time frame, and I hope you guys enjoy. So this is what the chart looked like when I sat down at my desk. I was on the 4 hour at the time, so this is what I was anticipating. Price was failing to have a body close over the 10 o'clock candle's high from Monday, and if I play the next candle, you can see what happens. The 4 hour or the 6 hour candle closes again inside of the Monday at 10 o'clock high and then displaces lower. Now, if we go to the 1 hour, you can see that we are also getting more displacement through this area. We have our liquidity level here. This is the Asia low, and we had high impact news at 8:30. So, what do we anticipate high impact news to do at 8:30 if we are looking for bearish prices? We anticipate 8:30 the volatility injection, the news release, to have a volatility injection, but more importantly, it is going to manipulate. This is exactly the kind of candle that we want to see when we are anticipating London low to be the draw or Asia low to be the draw. So we have a open low or open high low close, and that's exactly what we want to be seeing. And we had SMT at this high with S&P. I'll show you that right now. So here is the high from yesterday at 3 p.m. and you can see that ES failed to take that high. So that gave me even more confidence in this trade. And what I was anticipating on the 15-minute chart was this here. We displaced through this area. We are, more importantly, we have SMT, right? But we are respecting these up close candles. Don't focus on the wick, focus on the bodies. If we draw this from here to here, you can see once again failing to get above this high. And that's good. Then once at 8:30, we're on the 15-minute chart. We get a strong displacement lower here. This is that same 10 o'clock 4 hour high from yesterday, Monday. And we close below all three of these up close candles, which is where we get our CSD. That's our change in the state of delivery, creating this breaker with a 15-minute fair value gap. So initially I was going to short right at the open, or right at the close of this 15-minute down close candle, but I didn't short because of the divergence between ES and NQ. So at 9:30, this is the 9:30 open, you can see that ES is doing the complete opposite of NQ. So when the indices are diverging like this, I do not like to take a trade, and that's why I was not going short right at this 15-minute gap, even though it did end up working. I do not want to gamble. I want to take a trade where I feel most comfortable with, and I did not want to take this trade. But it did exactly what I wanted it to. It rejected price sharply. So this is our one of the internal London lows with our external London low down here. Now if we narrow in a little bit on the 5-minute, you can see this is where our change in the state of delivery occurred, which also creates our bearish order block. Just back on the 15-minute, these three down up close candles are your bearish order block. And on the 5-minute, you can see here once again, pay attention to this high, these two equal highs. The candle bodies are refusing to close above or even close to this 5-minute high. We leave this 5-minute fair value gap open, and if you look on the 1-minute, this is where I looked for my trade. So we're going to get rid of this change in the state of delivery. This is that same 15-minute fair value gap, and I'll make this line a little bit bigger, and we'll make it pink or red. So we came up, took this 1-minute high or the 5-minute high, however you want to look at it. We're inside of the 15-minute fair value gap, as you can see, and now we're disrespecting this bullish fair value gap while ES is getting a pullback. So this is why I wanted to go short inside of here. Since I was trading the weaker asset, I wanted to short once I got a valid setup. So I went short right here at 940 on this up close candle into this inversion, into this other inversion. You can see we have two fair value gaps. That's a BPR. And if you look at ES at 940, you can see right here, we get this climb up. I also saw this at the time. I saw the SMT and then the displacement lower, and I knew I was on side at that point. NQ is very weak, so I wasn't anticipating much of a pullback, and I got in right here on the inversion. I saw that this down close candle, which is a breaker, got respected, and I wanted to see this fair value gap get left open. Why did I want to see this fair value gap left open? In real time, these two down close candles printed with some speed, and I liked how we disrespect this and turn this into a BPR, and I wanted to see this stay as a breakaway gap because of the speed and displacement through this area. I got filled here. As soon as we broke below this low, I moved my stop to break even. Why did I move my stop to break even? One, low probability week and a weird day with the indices diverging. Also, we were inside of this 30-minute FVG, but I was confident of knowing where my draw and liquidity was. We're inside of this 30-minute FVG at the time, and these three down close candles, which is your propulsion block. This was your original order block. This is now your propulsion block, because an order block created off of an order block is now a propulsion block. And you can see the move that the propulsion block created versus the regular order block. So you can see where we were bouncing from after we took this low. We souped into the 30-minute FEG and then had a fake rally back up before displacing lower. And if you were wondering what the risk to reward looked like on this trade, wasn't great, wasn't a 2R, but it was more than what I was comfortable with risking. So I got filled at 98. Stop loss was at the high of this FEG, and I was just targeting 20 points just because I am on my Express account now, and I have no interest in trying to take more than I need to on days, especially like days like today. Normally I would have targeted the internal low of the Asia, but today I was completely fine with just taking 20 points and moving on with my day, and I want to slowly build my account regardless. So you can see 1.8R trade, and it did end up delivering to our Asia low. You can see right here, one of the internal Asia lows, which is right here. And that was the trade. That was exactly why I took the trade. And if I want to mark out the midnight opening price as well, that also gave me a little more confidence in understanding that all of the sell stops lying with the midnight opening price, you look on the 5-minute, were most likely going to be the draw. So beneath midnight in a bull market is normally where you're going to be in a discount, and so that is also why I was anticipating this internal Asia low to give us a reaction. But very simple higher time frame to lower time frame. I just used a simple inversion BPR to get in my short position, and that's also why it's very important to read price action in real time, because that is the only way you can anticipate this gap to stay open. But just understanding where the higher time frame is, understanding what day of the week it is, understanding if it's the week or the day is going to be high or low probability. Like today was a low probability day because of the divergence between the indices, and just protecting your stops, protecting your accounts with, break-even stops, taking profit earlier than usual, etc. Right? Nobody has to tell you how to trade. Trade within your plan. Trade with how you want to. But I hope you guys enjoyed this breakdown. I hope you guys learned something. If you have any questions, leave them in the comment section down below, and I'll see you in the next one.